Hi, and welcome to Homeownership 101. During this lesson, you will be able to identify ways to estimate how much you can pay for a house, understand home financing options and costs, learn how to get qualified or approved for a mortgage, understand how to compare costs of loans, understand how to make an offer, negotiate with the seller, and finalizing or closing the purchase. Buying a house is a big decision. For many people, a house is the biggest purchase they will make in their life. These are the steps to buying a house. A big question to answer when you want to buy a house is, how much can I spend? There are two ways to estimate what you spend. The spending and saving plan calculates how much money you can spend for a house. To use the spending and saving plan, you calculate how much money you earn every month after deductions. Subtract all your expenses from the amount of your paycheck, but do not subtract the amount of rent you pay each month. You do not want to spend too much on housing costs. Your debt-to-income ratio indicates how much of your income pays your bills or debts every month. Include the monthly payment for a loan to buy a house. The debt-to-income ratio is your total monthly bills or debts divided by your monthly gross income. Your monthly gross income is how much money you make before deductions. The debt-to-income ratio is a percentage. If your debt-to-income ratio is 40%, this means that you have 60% of your gross income to pay all your expenses. If you do not have much money after you pay your bills or debts, you need to increase your income and minimize your bills or debts. A mortgage is a loan to buy a house, condominium, or townhouse. When you buy a house, your monthly mortgage payment has 4 parts. Part 1 is the principal, or amount of money you borrow. Part 2 is the interest, or interest on the amount of money you borrow. Part 3 includes real estate taxes. Part 4 is insurance to protect your new home. The down payment is the cash you pay to buy your house. If your down payment is a lot, you borrow less money. Other costs associated with a mortgage include interest, or the money lenders charge you to use their money. Points. If you pay a lot of cash to buy a house, you receive a lower interest rate. As a result, you will pay less money over time. Fees include lender charges for application fees, processing fees, and additional insurance fees. Mortgages come with an annual percentage rate. The annual percentage rate represents the total cost of the loan in a year. The annual percentage rate includes the interest rate, points, some fees, and other charges you pay for the loan. Use the annual percentage rate to compare loans. There are 2 types of mortgage loan. Each mortgage loan calculates interest differently. There are fixed-rate mortgages and adjustable-rate mortgages. With a fixed-rate mortgage, the interest rate does not change. With an adjustable-rate mortgage, the interest rate changes. Mortgage interest rates change every day and sometimes every hour. A rate lock is when you lock the interest on a mortgage loan. When you lock the interest rate, the rate will not change at closing. If you finalize the purchase of your house by a certain date or the rate lock period, there are no changes to your mortgage application. With a balloon payment, your one-time payment is higher at the end of the loan period. Some people prefer a mortgage with a balloon payment because their monthly payments before the balloon payment are lower. You may want to have a balloon payment if you plan to sell your house or refinance your mortgage before the deadline of the balloon payment. Sometimes, with a balloon payment, selling or refinancing your house is not permitted. A mortgage with a balloon payment is tricky. There are 2 types of mortgages. There are conventional mortgages or government-guaranteed mortgages. Government-guaranteed mortgages are insured by the United States government. Anyone can get a conventional mortgage, but to qualify for a conventional mortgage is difficult. Government-guaranteed loans have many names. They are called FHA loans, USDA loans, VA loans, and HUD loans. State and local government agencies offer assistance to obtain a mortgage. Consult the state info section at hud.gov for help. Home buying assistance programs include down payment assistance or assistance with closing costs. If you are buying a house for the first time, there are first-time home buyer programs. First-time home buyer programs offer financial assistance with a down payment or obtaining a loan. If you are buying a house for the first time, there are many programs to help you. There are also programs to help people buy a house if they work in a specific profession. Your state housing finance agency offers many loan programs and other forms of financial assistance. There are 4 factors that affect the amount of your monthly mortgage payment. Amount of the loan. The less money you borrow, the less money you have to pay back. Interest rate. The higher the interest rate, the more the loan costs. If you have a fixed or adjustable interest rate. The period of time of your loan. You can select a 15-year loan, a 30-year loan, or select the number of years you want the loan. Let's compare loans with different periods of time. With a 15-year loan, you have a higher monthly payment than with a 30-year loan, but you will pay less interest. You will finish paying your loan sooner. With a 30-year loan, you have a lower monthly payment than with a 15-year loan, but you will pay much more interest. A 30-year loan is a loan for a much longer time. As a result, a 30-year loan is much more expensive. With a 15-year loan, a 30-year loan, or a loan with a different amount of years, you can pay your loan early by paying more money each month. Paying your loan early costs you less money because you pay less interest, and pay your loan earlier. Pre-qualification is a way to calculate how much money you can borrow. Pre-qualification does not guarantee you a loan. Pre-approval is a commitment from the lender to give you money under some conditions. You should get pre-approval before you look for houses. Almost half of all people who get mortgages don't compare prices of mortgages. Shopping for a mortgage can save you money. Get loan estimates from different lenders. A loan estimate is a 3-page form you receive after applying for a mortgage. A loan estimate gives you important details about your loan. When you find a house you want to buy, you make an offer. Your offer includes the address and description of the property, the sale price, how much money you are going to pay, the date you will buy the house, amount of earnest money you are going to pay. Earnest money is the amount of money you give to the seller to demonstrate you want to buy the house, how you are going to pay taxes and utilities. When you make an offer, the seller accepts your offer and negotiations end. The seller does not accept your offer and makes a counteroffer. A counteroffer is when the seller suggests a different price. You do not have to accept the seller's counteroffer. The seller does not accept your offer and does not make a counteroffer. When you buy a house, the closing is the final step. At closing, the loan becomes final and money is distributed to the seller and other people. Now, you are the new owner of the house. You receive these documents at closing. The loan estimate documents are information about your loan. The closing disclosure document identifies final details of the loan. These details include the final closing costs, the person who pays, and the person who receives money at closing. Initial escrow statement identifies the costs the lender needs to pay from your escrow account. A promissory note is the document that describes your loan. You may want your mortgage to be automatically deducted from your bank account. A mortgage or security instrument explains your rights and responsibilities as a borrower. With the mortgage, the lender has the right to foreclose on your house if you do not make payments. Buying a house is a process. Make sure you have money to buy a house. Learn about your financing options to buy a house. Compare mortgages. For more information about banking and other financial resources, please call 410-396-3228.